In the energy quadrant, taking a look at the July natural gas futures contract, which has a 2-day win streak going 2 consecutive sessions higher after the biggest one-day drop, which happened on Tuesday, down 16.49% since November of 2018. That came after a fire that shut down a liquefied natural gas refinery. That means it can't be liquefied and therefore shipped off to Europe. Europe has their prices up over 40% since Gazprom shut down one pipeline and also since this LNG refinery fire. The market had already fallen 10.92% in the prior 4 sessions to that big drop. Now the low today, 7.442, was 0.3% above yesterday's settlement, so a straight up day. We went up to 8.027, so up above $8 again. That was up 3.94%. And we finished a little bit lower than that, but still 3%, more than 3% higher on the day. Now, we did get the weekly natural gas storage report, and that printed a build of 92 billion cubic feet, slightly larger than expectations of 89 billion cubic feet, and larger than the 5-year average of 79 billion cubic feet for this time of year. That improved supplies from 1.999 trillion cubic feet to 2.095 trillion after a confusing revision from the EIA, and this improved deficits from 337 billion cubic feet to 323 billion cubic feet. Now, weather's not going to be very helpful. We're going to have roller coaster demand for natural gas over the next week or so. Very high natural demand through Friday is going to ease to moderate to high over the weekend, then back to high next week. Hot temperatures are continuing over much of the interior U.S., including highs in the upper 90s for Chicago and the Ohio Valley. Cooler exemptions continue across the Northwest and then the North Plains and New England later in the week with highs from the 60s to the 80s. And then temps are going to ease this weekend as a weather system arrives over the Great Lakes, East and Northwest, although it's still going to be hot in the interior U.S.